Good morning, by the
Good
dippers.
morning. Welcome to Wednesday. Wonderful Wednesday.
Welcome to Wednesday.
Good morning.
Good
Morning.
morning. How are you?
Fine from Illinois.
Right
It's
on.
gonna be. I'm just 2 states to the west of you, and it's gonna be in the 80s today, almost 90. So maybe that's heading your way.
I'm glad because I've been putting up a fence and I still wearing my Carhartts.
Oh, I know. It's been windy here for the last couple of days. Really windy.
Yeah, it's been real windy here. I was struggling with those 6 foot panels yesterday
I bet.
and finally got it up. But yeah, the weather hasn't changed over here. No, it's no spring yet.
Well, if this goes your way, you're gonna see some relief. So hopefully it gets there, but not till I enjoy it today and tomorrow.
We're welcoming it.
Yeah. All right, I'm going to get going because we're always busy. People have things to say. So I'm going to start out with this.
Real
I just
quick,
put this.
this is not advice or any recommendation, especially
No,
today.
it is not. No. And on Good Friday, which is 2 days from now, we're not going to have this meeting. The market's closed and give everyone a little 3 day holiday. So um, tomorrow will be our last morning edge meeting, just to let you know. Uh, I just put this up in the Platinum channel under market news, and it just still amazes me. And this story was from Quartz, and hedge funds are dumping stocks just as mom and pop investors rush in. As markets swing wildly on tariff headlines and economic uncertainty, a curious split is emerging. Retail investors are diving in. Institutionals are stepping back, even as big banks report blowout trading revenue. The underlying behavior suggests churn, not conviction. Retail flows in U.S. stocks have surged this past week, with everybody's investors aggressively buying the dip, according to Vanda Research, even as volatility spikes and recession warnings linger. Trading app data shows a notable uptick in activity, especially among tech names and single stock bets. In short, Main Street is leaning in. Hedge funds have slashed their equity exposures by nearly 45 billion over the past 30 days, according to data shared by the Kabasi letter, making a sharp divergence from the retail crowd. Okay, so again, I'm going to talk about the timing of this matters. The U.S. major indices have yet to recover to pre-liberation day levels, and professional money managers appear to be more cautious in the face of policy whiplash. Rather than piling into rebounds, many seem to be reallocating or sitting tight, reflecting a stark contrast with retail investors still buying the dips. Goldman Sachs, JP Morgan, Morgan Stanley made over 12 billion in equities trading revenue in the first quarter, capitalized on surging client activity. Busy trading desks signal motion, not conviction. If buy the dip enthusiasm was dominant among the pros, meaning institution, you would likely see stronger rebounds in the Mag 7. So again, what we're seeing is buy the dip in the retail. And I was watching Making Money with Charles Payne, and they had an expert on. He's like, well, that's because the retail investors are way smarter than they used to be, and blah blah blah. And I would probably say that's not true. I think what we're seeing is a lot of people who got in during the pandemic, where buy the dip, was the way to do it, and that's just recency bias. That's what they know how to do. And if you look at the signals, you look at the technicals, you're not seeing anything that's saying, yeah, jump in this market right now, at least from my opinion. Okay, so just be careful out there. It is your money, and I've seen this 4 or 5 times in my lifetime, starting in '87. So I just want you to be careful when you're talking out there. Of course, today, unknown market condition, NVIDIA came out. They're going to take a $5.5 billion charge for tariff restrictions. Okay, that came out after the market, so that's going to affect the market today. We have retail sales reports coming out. And today I want to talk about looking at some of the charts, and really what I'm seeing is this death cross. And we're seeing a death cross when the 50-day or 50-week, but this time the 50-day moving average moves below the 200-day moving average. And that's a technically bearish signal. And that suggests a potential longer term downdraft. So we'll see this on the charts here today. And let me pull a chart up and get going. And this is the SPY, okay, the S&P 500. Here's your death cross. The 50 is crossed over the 200, okay, a bearish technical indicator. When you look at the S&P, we're seeing a little bit, and you're seeing a little bit of consolidation the last couple of days, just sideways. Here's where we opened a few days ago.
Same thing.
Okay.
There you go. Here's where we're looking to open today. This pink line. Here's where we closed. Again, we were seeing a little bit of the MACD. We're still under the 200, still under the 50. You know, we were seeing a little hope, but we'll see what happens today. Of course, the Qs are going to get hit. So here's the Qs. Here's where we're going to open right below the right below where we're seeing the intermediate support level. Again, we're looking at, we've been hitting this 20, okay, and we can't get past the 20, and you can go back a ways to see that the 20 has been a strong line of resistance both in the Qs and in the SPY. We'll go back to the SPY here for a second. And again, see the 20, hit, 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 even back in here, hit, hit. The 20 has been hard to get by. And again, nothing that I'm seeing that excites me in these indices right now. We were seeing a little bit, again, here's the Dow, 20, 20, 20. We were getting a little bit of the MACD crossover. When we haven't quite got the death cross yet, but it looks like it's going to happen up here on the Dow. When we look at, we was looking at the dollar. Okay, the dollar index is under 100 again. We've seen a little bit. It hit the intermediate support level 3 days ago, and 1, 2, 3, 4. We were 4 days outside out of the Bollinger Band, and here we did pull in yesterday, going a little bit sideways. So we'll see what happens again. We're not seeing anything on the oscillators. They're telling us, but we are moving sideways a little on the dollar. So we'll see what happens on the dollar. NVIDIA, here's the big one. This is the one that's going to, we hit this level on NVIDIA 4 days, 5 days ago, and this is where it opened. I put this yellow line here, and we haven't been able to get past it even the last couple of days. And here's where we're going to open today, right above the 9. We'll see if the 9 can hold as resistance. We were doing pretty good on the oscillators, and the MACD came up, but the reason the MACD came up so strong, if you look, is because we had this big, huge candle right here, and that moved it up. And remember, these are lagging indicators, so that's why it's after the fact. So we're going to open up lower on NVIDIA, and we'll see where it goes. You could go, you know, if it gets past the 9, then what we have basically is Bollinger Band on the lower side. And of course, this is for all the mags.
Well, they're taking a $5.5 billion charge that came out yesterday.
Yeah, yep, and that's going to hurt them. Meta's been in a downward trend for the last 5 days, not sideways. It came up, hit the 200, 200, 200, came back down. Here's where we're going to open today. Just not looking good even on Meta. You would think Meta would be, you know, resistant to tariffs because they're not really shipping anything to China or receiving anything from China at that point.
There's a dispute with Washington.
There's a lot of disputes with Washington right now. I think Apple. I was surprised with Apple because, you know, they came out and they said, you know, we're going to only do 20% tariffs on iPhones and all this stuff. And yesterday was just a, you know, candle of indecision. We're going to open up just a little bit lower. We're still above the 9. Here's your death cross on Apple. It happened a couple of days ago. Had a little crossover on the MACD, but again, Apple will be under 20% tariffs. Tesla is kind of trading sideways. Okay, within this band, right between support level and resistance level. And it's just been that way for 5 days, basically. And we're going to open up just right below where support is, and we'll see what happens. But we've just been going and consolidated sideways. Here's your death cross, happened a couple of days ago on Tesla. Google. Oops. Google's going to open up down here. And you can see where it's going to open up where you've seen support and resistance before. You're just going back a little ways. Again, here's where we opened 4 or 5 days ago. We're just seeing that same line. If we go back 2 years, you can see we've had resistance and support on this line before. And then the next level down will be right in this area here. So again, we've had a little bit of a turn from our dip down low, but again, sideways patterns we're seeing on Google. And now we're gonna dip down. We'll see what happens. It's not what happens at the beginning of the day, it's how we close out. Microsoft's going to open down below it's moving. It's a intermediate support level. Again, we were seeing some strength in the MACD, but we had some resistance up here at the 50, but sideways. You know, it came back up and then we kind of stabilized. But today's going to kind of mess that up maybe. Amazon's just been floating here. Again, it's going to open up just a little bit lower, a little below the 9. And then again, you can see we got some maybe nibbles at 170.65. We're at 179.59 right now on Amazon. So we're not going to get much help from the mags today. And the mags are a big part really of the indices, especially the S&P and the NASDAQ. Bitcoin's been rolling right along the 50 here. And right now it's just a little below the 50, but you've been finding support on the 20. So we'll see what happens. We got a 9 moving up. We still have some oscillators that are looking, you know, all pretty good in Bitcoin. So Bitcoin's been fairly resilient during this time, but again, sideways pattern so far. We'll see if we can get this turned up. Here was the death cross on Bitcoin right back in here. And of course, that's going to affect MicroStrategy a little bit, but MicroStrategy has been pretty resilient too. We're going to open up just a little bit lower, but we're still above the 50, above the 20, above the 9, above the 200. And we've got oscillators that are looking pretty good. So MicroStrategy's hung in there. We do have resistance up here at about 340. We closed yesterday at 310. So again, very volatile MicroStrategy. There's not too much out there to look at. There's one momentum type stock, and that would be Casey's General Store. I just stopped in there yesterday and put some gas in my truck, but it's had a pretty good roll once it got above the 9. Be careful when the intermediate resistance level comes in, because that'll stop it. But this is about the only one that I've seen that's still rolling on a momentum level. We might get a little more support in gold today. You're looking at some golds up, but again, we have resistance level right here. And it's going to be, unless it can get past that sustainably, you know, we're going to have trouble. If it does get past that, I'm going to move it up and see it doesn't even move that much. So there's a lot of resistance sitting right there, you know, on gold. Berkshire, always look at Berkshire. Berkshire is still above the 9. No death cross here. Here's the 50 or the 200. Here's the 50, the 9, the 20. So Berkshire's still sitting right there where we were talking about Monday, you know, where we put it on the list. So, and one more thing I want to look at real quick is we talk about Bollinger Bands. And here's UNH. You know, UNH has been doing pretty well and got above its 200 after hitting it twice. But you can see we went 1, 2, 3, 4 outside of the Bollinger Band, hit resistance, and then came right back in the Bollinger Band. Okay, so a lot of times you don't see this go past 5. So if you see it getting at 4, 5, you know you probably have a good chance that price action is going to move within that Bollinger Band, and that's what we saw on United Health. So again, the name of the game in the indices is death cross, and we're seeing them, and the Dow's about to happen. And like Trent found a quote, you know, nothing good happens under the 200-day simple moving average. And until I see things moving in another direction, there's really nothing that I'm gonna look into to really do much. And I'm going to maintain my investment positions, and I'm just going to hold and wait for a swing trade setup to come that meets my trading guidelines. So that's where I'm at today. And I know it's boring, but I would rather maintain my cash and sit it in treasuries and wait, as opposed to, you know, I'm just going to use NVIDIA as an example, being in NVIDIA. And then, you know, you have what happened yesterday, like Bob said, $5.5 billion hit, and then you're going to see it come down. You know, and we're just in uncertain times, and the news is really driving it. So until I get back to a standardized, like I'll standardize market, I'm gonna sit here, and I'll tell you guys, I'm just gonna sit and wait. So Trent?
Yeah, so one of the things I wrote about this morning was unknown market events. And Mark has really emphasized this since he and I started working together. And you never know what's going to happen. And I think unknown market events are going to accelerate even more so in the economic environment we're in. ASML came out overnight. They reported earnings. They're uncertain about their business going forward because of the tariff issues. Taiwan Semiconductor raised their U.S. manufactured chip prices by 30%. Who would have thought it? This is going to continue, and majority of the S&P 500 companies have readjusted their projections going forward because of supposedly unknown market event that tariffs are going to have such a big impact on the global economy. And I think this is an environment where, I got a text from Bob last night saying NVIDIA was writing off 5.5 billion, charging back 5.5 billion because of tariff issues and not being able to ship their H20 chips to China. Fortunately, I'm on the right side of that, and that was an event we didn't know was going to happen. And so it comes out and boom, you got 5% off NVIDIA prior to market open right now. Just hit upon a couple charts real quick. I think it emphasizes when we're in a negative gamma environment. This is market makers using options to hedge out their books. And we are still in a negative gamma environment, which means volatility can be rampant. It can expand, and it can go both ways, as I've explained before. It can create volatility on the upside, but also on the downside. And we've seen that over the last 2 weeks when we saw the S&P jump higher. I think it was Wednesday of last week. And so we continuously can see volatility being a big factor here. When we look at the VIX chart, we're still in that F bucket environment. Today, the VIX has been as high pre-market, as high as 33.63. Presently is sitting at 31.74. But yesterday, it had a bit of what I would call a pivot point in its candlestick. So does that mean volatility is going to expand again? Are we going to see volatility head back up towards 60? Very possibly we could. And I think this just continues to emphasize you got to risk manage. You got to have a risk management plan so that you can preserve your hard-earned capital that you've earned. When I look at the dollar, once again, continues to start selling off again. It has had, yesterday was up. Today is now in a downward trend. It's lower lows, lower highs. Dollar is weakening. The 10-year U.S. Treasury sits at 4.32%. If I'm Treasury Secretary Scott Bessent right now, and I've got $4 trillion, I got to refinance this quarter, I got to figure a way to drive this yield down on the 10-year. He instead of financing it at short term, he wants to finance it at a longer term duration, so 10s, 20s, 30s. That way he has time, but he's got to get these yields down. So how is he going to do it, or how are they going to do it? I don't know. I could speculate, but that would not be a good idea. The MOVE index, which is the volatility index for the bond market, is declining today, which is encouraging. You'll see volatility in the bond market subside a bit, or is showing signs of subsiding, but still is above its average of right around 90 versus today it's at 122. So there is still volatility, just as there is volatility in the VIX as well. And then just a quick morning update on NVIDIA. Presently, pre-market's trading at 104.60, closed out yesterday over $112. So that's a big drop pre-market. I don't know where this is going. if momentum kicks in and these algo systematic trading systems kick in, we could easily see lows again in NVIDIA. I go back to the question that Michael asked, I believe it was at the beginning of the week or late last week, and that was, is this the time to buy NVIDIA? And I think it's a general question of, is this the time to buy the dip? My answer is no. This is still a very volatile, very headline-driven market. You know, Mike has pointed out, watch midday. When Trump comes out with something, it could change everything. What I'm seeing today is the fragile nature of AI revolution. And that is not calculated into projected earnings in the future. I mean, you have tariffs, you have these companies who are, you know, semiconductor companies, AI related companies are now coming back going, wait a second, we didn't figure this in. We didn't figure these headlines into this. So this is a time to be patient, to sit on your hands and just, as Mark says, eat some popcorn and watch the show. That's what I got for today. Let's open it up to the floor. What do you guys got? Questions, ideas?
SHLD, it's a defense stock that I'd mentioned before that's seems to be doing okay right now. Right now, yeah, I'm noticing like all the highs are financials or gold or miners. But I'm accumulating that, a few other my favorites, and you put up I said.
Yeah, that's a good thing, Paul. That's what I'm trying to ask. I know, like I read something or some video. They're saying buy gold mine stocks rather than the real gold, physical gold, and like once that increases, sell it and maybe get the physical gold. That's what I heard somewhere. So, Paul, could you put some gold mine stocks here so that we can check what are some good gold mine stocks?
Funny you're asking that. Well, actually, there's a list that Mark has on the platinum.
Oh,
you
okay.
could, yeah, there's a list of them. You could pick your favorite. GLD is one I go to, but
Okay.
I would be, again, we looked at GLD and again, watch out for these resistance level, even when it looks like gold is popping. And again, I can modify it out and it doesn't just really move very much. So there's some pretty hard resistance above up here at about even, it's at 299.28 in the short term. So
GLD is pre-market is at 305.04.
yeah. So
So
just be
you
careful.
can see a bump.
I think
You know,
gold is a
I'm looking at
defensive
it.
play.
I'm looking at it from a technical point of view, and if you guys are looking at it from a fundamental long term, then that's different than how I look at it. So
You combine them.
Okay.
So another one is I've been putting money in LRN, Stride.
LRN, okay.
Well, yeah, it's kind of online
but
educational.
I
I
gotta
know
watch.
you don't.
Gotta watch the volumes down here because there was a big one there, but recently the volumes have been, you know, kind of low. Just be careful. You know, when you have lower volumes, and these aren't extremely low, they're just on the threshold, but it's hard to get a bid and ask, especially when the market starts moving a little bit. But and watch your watch your resistance level here. Again, you got to look at risk. You got to look at risk and reward. You know, your reward is up here, from here to here, and your risk is from here down to your support. So you know, that's all in part of your risk management plan. So just keep that in mind.
Yeah, and one more question, Mark. Like, sorry, yeah. So these are inversely proportional to the stock market, right? If stock market goes up, generally this goes down, and they're vice versa, right? I'm just wondering.
No.
Good correlation between gold and equities.
Yeah.
Typically, gold is a safe haven, as is treasuries, but that's been in question here in the last couple of weeks. And so, you know, I think honestly, we're in a different environment in the last 6 months when it comes to gold, because gold's been on the move for quite a while now.
3 months.
3 months. So I think it's more of a possibly, I mean, I'm just putting this out there, but a leading indicator to what is to come. If you've got so many countries building up their gold reserves, which has been happening for a while now, beyond 3 months, but it could be a bit of a sign. I think, who was it? One of the big research firms came out and said 4,500 was the target that they put on gold prices, which would be probably what, I don't know, $500 to $1,000. Now it's higher. I mean,
Sounds
that's a pretty
crazy,
big
doesn't
jump.
that? $4,500. I mean, I would feel it's like at the top now.
Yeah.
It would feel like that.
This is your
Yeah.
monthly chart. You
And
basically
4,500. Think about that. That's like insane.
Yeah.
got
Yeah.
into gold on a monthly chart December 30th, 2022. And this is monthly, but it's just been riding the Bollinger up
If it's
for a
going
long
to
time.
if it's going to 4,500, I mean,
You got a lot of problems.
yeah.
Yeah.
I mean,
I mean,
they're real
NVIDIA
deep.
at
They're
15
deep.
is a possibility.
February is when it broke out.
That's beyond tariffs. 4,500.
Yeah, that's a break. I mean, I think that's a breakdown in the whole global system, in a big way. That's a dollar, US dollar, that's probably about 50% of the value it is today.
Hey, Mark,
It's just,
I mean, this kind of broke out. I mean, it's really, when you look at it back in 23, this is monthly.
right, but
Okay.
if you compare it to the S&P or any of the other things, you'll see the behavior. When I chart it, my chart include the S&P. So you try to see
There's
how
no
this
correlation
particular,
between gold and the S&P. It's all a reflection on inflation and the flight to safety.
just saying from a technical
It's
standpoint.
it's
From a tech-
not.
Here's your
There's no
S&P.
relationship whatsoever.
Here's your S&P, this blue
Yeah.
line. Okay. And then you can see and this is on a monthly, about in January, it started diverging from gold,
Absolutely.
but it rode right up with it all the way. I mean, look at it. It's been the same until then. So right here in January is when it started to diverge. But
Yeah.
other than that, it was correlating with it.
No, understood. The gentleman had asked that when did we start seeing the convergence?
Oh,
Yeah, the delta. That's what he was saying.
Yep. And one last question. I saw that the crowd strike is, I think, in this market keep going. I mean, so just wondering what's the thoughts on that stock, Mark? CRWD, CrowdStrike.
oh, hold on. Okay.
I have a lot of CrowdStrike. That's in a good space.
Good for you, Paul. I know, keep going. I mean, I just entered when it was 320, and then it's when, I just thought it's not right market and pulled
Well,
it back.
if you look at the behavior of CrowdStrike and compared to the market, it holds its own to some degree. The Bollinger Bands, I mean, it's not as tight as Palantir. Palantir, I think, is a more resilient, less volatile, but CrowdStrike is the #1 player in the cybersecurity world. They have their own niche. So I don't think, long term, they're not going away. So
Palantir is a retail stock. It's controlled by retailers. If the retailers get out, that could tumble also. I'm curious to see today what NVIDIA does to all these other stocks. That's going to be interesting.
Yeah. If you look at Netflix is actually up today. It goes back to that thesis of, when people don't cancel their entertainment. It's up $2, but I think it's up against resistance.
well, they were in the
so
Wall
we'll
Street
see
Journal
about that.
yesterday. Wall Street Journal indicated that their subscribers went up, that whole dance. And, their earnings, I think, are on Thursday, maybe. So, there's anticipation. The stock typically goes up, before earnings. So we'll see.
Just watch it. You got
Yeah.
resistance on this line. Hit, went above it
You're
a little
not
bit.
showing your chart.
We can't see it, Mark.
Yeah.
Oh,
Okay.
sorry, guys. Sorry. Trying to keep up, you guys are flipping around a lot today, so. But again, resistance here, boom, boom, boom. We'll see, you know, it's got to sustainably get past that. Let's just go see what the next level of resistance would be. Didn't move on short term, didn't move on long term. So it's pretty set on about 996.79. We'll see what happens. You know, just again, if you're trading it on a swing, you're up against, you know, higher risk versus reward, in my opinion. But if you're investing in it, then you got to go back to the fundamentals and get your convictions. But the thing I like about daily, at least it's over the 200. There's only 30% of the S&P are over the 200 right now of 500 stocks. So again, that's bearish. And you also got to look at the 50-day here is leaning down too, even though we're getting a little curve on the 9, but the intermediate, you know, level is heading down. So
How many more major earnings call are there for the rest of the week?
you got quite a few. Today is ASML, the technology one, Travelers,
Which was
Alcoa,
bad.
CSX, Kinder Morgan, and then a few regional banks this week.
So when do we get into what NVIDIA? I think it's May 28th. So actually, yeah, May 28th. When does the other big May 7? Apple comes out the 1st of May. Meta is the 30th. Next
First wave of
Wednesday.
banks did good.
That's because of
And
trading.
then,
Those were the big ones.
and then the
And
24th
Their guidance is okay
is
too.
Amazon. So we still got, I think, a bulk of the S&P 500's
Yeah.
market cap still to report, which if ASML and what we're seeing in NVIDIA and handful of these other companies are showing is this tariff, their projections, I think their tariffs are going to have a major effect on forward earnings, which will have an effect on the overall direction of the market. Patrick, what you got?
I'd like to ask Mark about his chart yesterday on gold spot, and in particular regarding the level that it has reached. And I'm just wondering, does your chart do regression trend analysis? You probably use the Fibonacci retracement level. I think it has reached the 1.618 level, which is the golden ratio.
Yeah, I'm not a big Fibonacci guy, so someone else that might be could probably answer your question there.
Yeah. What about the regression trend? The fact that the price is touching the 2 standard deviations, which is the maximum that's usually tolerated by stocks on with regard to fundamentals.
Yeah, let me put this up. You're talking about gold?
Yeah, a gold spot you mentioned.
Okay. So let's just put up GLD. On gold, here's what you're talking about, the 2 standard deviations, upper Bollinger Band. You can see it went above it just once, but it's just riding it right now, okay? Ira Epstein, he's a big trader, and he would go down to the stochastic and see if it's over 90 for 3 days in a row, okay? Which it isn't right now, 2 days. He would say you could ride that further, okay? He would call that embedded. If it gets outside of that Bollinger Band, it's not going to be out there more than 4 or 5 days in a row, and it's going to pull back in. But again, I'm seeing resistance 3 days in a row right here.
Yeah, it's just that the gold spot stock, there was more specific signs on that to demonstrate. If you could get that up, I'd like to revisit that if you could.
What's the symbol in that? Do you remember?
It just says gold spot. I'm not sure what the
That's,
symbol
It's,
is.
that's the
uh,
spot market,
it-
GOLD.
GOD. Okay, I think we talked about this yesterday, didn't we, Mike?
Yes, you did.
Yeah.
There it is, right there.
Yeah, you see, in trading view, they have this indicator called exploration extreme indicator, and it shows different colors: orange, indigo, red, to indicate the danger of something. It's a red warning, and coupled with the RSI, I think, is in excess of 75 at the moment. It's crept up over that level, I think.
Yeah.
Yeah.
The spot gold market is not a stock. You can't look at it like that. Okay. It's a safe harbor per se.
So wait, does it so you can't trade it as such?
Not like a stock. You can use it as an indicator.
Yeah. Well,
What?
you mean for the market?
Yeah.
Yeah, because if you look at this particular scenario, it's happened 4 times before in the last 20 years, and it's always been associated with a pullback of 13%, which will take place over the next 2 weeks. I've got
Based upon what, Patrick? What
based upon
periods?
First of all, the exploration extreme indicator, if that's flashing red, you get the RSI greater than 75. And if you have the regression trend analysis exceeding the 2 standard deviations, all 3 of those indicate red flags for a major pullback in the next 2 to 3 weeks.
Mark,
And if-
Patrick's making me proud.
And if you go back over the last, I'll give you specific dates if you want. August 2020, the same scenario with all 3 indicators had the same scenario, and it worked like a treat. It fell by 8.5%.
Okay.
If you go back to 2008 March, 15.5%. It fell.
All right. That's interesting, but what was the news on those dates?
What was the news?
Yep.
I've no idea. I'm just telling you I mean, the same scenario is happening now.
Yeah, it's technical versus news. That's a whole different. You have a technical way of looking at it, and you got the news.
Yeah,
and you
I'm
got
just
But
telling you
they're both influencing. The
Yeah,
news influences the technicals. Keep that in
We're
mind.
talking about a metal, not a stock that generates priced earnings and revenue.
Amen.
It's a different animal.
Well, then just wait the next 2 to 3 weeks and see if I'm right. If there is
Yeah, it'll be interesting, Patrick, but you have to remember, what is gold? Gold is a
Commodity.
yeah,
it's a commodity that people use as a source of.
Store of value.
So
Yeah,
what is
thank
what
you.
is the prediction? Is the prediction that it will level off now? Is that what history had indicated?
well, it will after that. It will rise, but it will fall on average about 13%.
Yeah,
And
that's the takeaway I got. That
Then it
yeah.
starts rising again. I mean, but that will take us probably to the end of April, and I think at that stage we'll know whether we have a recession or not.
Well, you're in a recession already. So
Well,
don't, that's
I'm talking.
incorrect speaking.
I'm talking about the NBER, the official statement.
Yeah, they're 12 to 18 months behind, Patrick. That's Keynesian economics. They're behind the curve.
No. The advance notice that comes out on the 30th of April will give you advance warning of the first quarter of this year.
From who?
From the NBER.
NBBR, remind me, what is that?
The National Bureau of Economic Research. They publish their findings the last day of every month, usually around between the 27th and the 30th of each month.
I never heard of them. What's their philosophy? Are they Keynesian? Are they Austrian?
I've no idea. There's eight
important.
economists that meet every month anyway.
But that's important, Patrick. There's different schools of thought in economics. Right now, the school of thought for central banks is Keynesian economics, which is demand side economics. You have monetary policy out there, which is the Austrian school. Okay? And then you also have a different school.
I don't care about these schools. The important thing that this publication every month is crucial to determine
It is,
the state of the
that
market.
is important, is your mindset, is how you determine your mindset. What is your philosophy on how you drive to an answer or to your conclusions? If, you got to take that into account with these things. You can't disregard it. You cannot care about it. You've got to look at the foundational decision-making process.
I'm impressed
Sure.
with his homework, though.
But there's more to do, Paul.
I know, but
Patrick, is your point?
my point I'm making is you can have opinion based, but you can have evidence based. I prefer the evidence based philosophy that you go on the previous markers, previous history. You got historical precedents that you must take into account.
So
is the history indicating?
Think about this. You have an environment where all of a sudden Trump has come out and thrown tariffs on everybody, and he's gotten super aggressive with one country. Does that match up with historical? How many times does that happen?
0.
Thank you. So you have to look at where we are today.
Yes. Doesn't matter about
versus
yesterday.
apples to apples, oranges to oranges, not apples to oranges or apples to grapefruit nut bars. I mean,
Patrick, we
we've
need to
got to
contact
consider
Trump.
these things.
Sorry?
What?
We need to contract Trump, Patrick, to understand what's going to happen.
Yeah, I think we have to. Go ahead.
I think what you're alluding to, Patrick, is that the gold is going to come down. That's what the research that you're seeing is saying. But see what happened last week when the liquidity strike hit. What happened to gold? That's a safe haven. It was sold off. All previous theories go out the window when people are running for the door.
Yeah, but there are many confounding factors with regard to gold price. For example, the monsoon season begins in June in India, and most brides have bought their jewelry already, and it's always a seasonal metric that you find that gold will peak, usually May, June, and then it falls off naturally.
Yeah.
Unless you need.
That's only a portion of the demand curve.
Well, there's 3 billion Indians, and so that's a sizable market.
I don't think there's 3 billion Indians.
Well, it could be 2 then. Sorry, I might be wrong.
Not even. They're on par with China, but then again, China, you're not even sure how many people are there because they don't even know.
Yeah, it's close to 1 billion now, just about, not like 2, 3.
Yeah, I was under the impression it was slightly over 1 billion, and China was like, they say that they're 1.4 or something like that. But that's only a small portion of the demand curve. The more right now, the demand curve got shifted in January because of the thought of tariffs and that gold was going to be caught under the tariffs. So they took it out of London, they sent it to New York. That creates a false sense of instability out there. Well, in this case, it's definitely a case of instability. There's multiple levels to investing, guys. You have macroeconomics, which is what's going on out in the world that the Fed and the Bank of England and all the other currency holders are dealing with. You have your fundamental legs, which is what Trenstad puts together at a phenomenal depth. But then you have to put the rest of your thesis together. Does it work?
Yeah. At the end of World War
together.
Yeah, at the end of World War II, Fort Knox had over 400 billion ounces of gold. It's now been drained down to less than 100.
Well, where are you getting that from, Patrick?
I did research on the amount of gold is stored in the US.
When was the last time somebody went into Fort Knox and looked at the gold inventory?
Well,
Come on, Mike.
Nobody has audited gold since the 1950s. So where are you coming up with this?
I think that thing is empty. I think Fort
Knox
Knox
could be. It is. There's the bigger problem.
It came down.
Yeah.
It came out in 1972 August 1970, when Richard Nixon severed the gold and the dollar parity with the rest of the world.
71.
In 72. It was called the Nixon crisis. I think it was 72.
Time for an audit of Fort Knox.
Yeah, without a doubt.
Hey, Mark, could you have a look at Ray? R-A-Y? SS is rolling, that's why I don't, a little late to the party here, but I don't know.
Raytheon.
Raytech, R-A-Y,
That is RAY.
Okay.
Raytech.
yeah.
Yep.
Maybe a little late to the party.
It goes back to risk reward, and it's gone past my green line. Let me move to a shorter term.
How come, yeah, my chart looks different than yours. Is that 3 months?
Oh yeah, this is weekly, sorry.
Yeah, that's right.
Let's go to daily. This will be better. 3 months. Okay, there you go. Yeah, it looks to me, for me, Paul, it's topped. You know, this would have been nice right here. Whoop.
Yep.
Yep.
Okay.
But it's above the 200. You don't see too many. I mean, it's just hard to find them.
Down.
Hard to find them.
No, I tell you, like you said, on the onset, that there's only 30% that are above the 200.
Yep.
And it's, I think it's the reshuffling right now of, what's going to be, it's like, I think these are hints to the future to what sectors will do better. You know, you could see some are going to the wayside, and some are people are liking them better. I'm
just seeing sitting on the sideline right now. I'm seeing, except for retailers who are buying the dip still. That, for me personally, that's what I'm watching. And I feel like I'm sitting on Bob's sailboat down in Florida, and Bob and I are determining, are we going to go out sailing? We're going to go to the Bahamas, but we see this huge storm out there. And so it's like, well, you know, we can make it, but we're gonna have to go through this storm, and we don't know what's going to be on the other side. Or we can sit here and drink margaritas until more clarity comes. And I think Bob and I would sit there on his boat and drink more margaritas.
Hey, Mark, that was a
good
great
choice.
story, but I don't own a boat, and how I have friends that own a boat. That's all I would do. I wouldn't own a money pit like that.
I got a
personally
question.
know.
Mark, when I put up
know Bob owns a boat because I'm sitting on it right now. Anyway, go ahead. Sorry.
Now I was gonna say, when I put up like the XPS S&P 100, and you talk about liquidity, I guess I don't understand in that the volumes per day are the same as they were, say, even a year ago.
You want to go out?
Right.
Liquidity has different aspects to it. And I think when I look at it, and it's come back a little bit, it's the amount of bids and ask. Okay. And so instead of maybe you have 100 bids and 100 ask, you have 1,000,000 bids and a million ask. Okay. There's a lot of movement, but the lots are a lot smaller, is what I'm looking at. Mike?
You know, the liquidity in the stock market is different with liquidity in, you know, for large financial institutions. Two different things.
Well, what I look at the amount, the bids and the ask, and how thick they are on, you know, like on an S&P. Okay, and lately they've been thinner, you know.
Yeah, and that's because it's mostly retail in here looking for dips.
Exactly.
They're the ones who are going to get destroyed with the volatility. If you go and you look, what was it last week? One day the S&P moved what, like 10% in like under 10 minutes.
Yeah, it shot right through the bids and the ask.
Exactly.
Yeah, that's what I'm talking about, Paul. The volume can still be there.
Right. So the volume has not changed. The volume has not changed. So there's still the same amount of trading that happened this year than there is last year. It's the same volume, but the liquidities, that's where I'm trying to wrap my head around.
It's just who is buying and selling.
If I have a bid and it's only let's say at $100, and it's only 100, you know, 100, And if I have an ask, at $102 and it's only 50, those trades move that faster than if I had a bid, at $100 of a million shares, instead of 100 shares. And so it takes a while for those things to work through. But if you have a small amount, they just zip up and down. And that's where we see those big old candlesticks, because it zips right through the market. I don't know if you've ever seen, level 2s, 3s screens and see the bids and asks, but market
good
makers.
example, Mark, a good example of that is market on close imbalance,
Yeah.
where you have too many sells or too many buys.
Explain that for everybody.
It's simple. There's too many buys out there and there's not enough sellers, and they have to find the right price to get everybody there, and the market will continue after the close to settle. So all of those orders that are out there, they have to go through them and match them, and then they come out and the price is always different. But that's liquidity. One side is bigger than the other. The liquidity I'm speaking about is firms getting margin calls. Where are they coming up with money? They're going out and selling anything and everything.
Yep.
I got one last one. Palantir. I'm in Palantir and I'm looking at this chart, and maybe you might like it from a technical standpoint. Aside from the Bollinger Bands.
That's a retail stock.
Yep.
Yeah.
I don't think there's anything technical about it. Retailers are controlling it, and it's way overvalued at this point.
And it's being traded by news.
Right.
That's what
I think the revenue has a little to do with it too.
But if the rest of that sector is getting beat up, why are they
I would beg
the
to differ.
outlier?
I would beg to differ that sector.
Technology?
You know what Palantir does, essentially?
Yeah. They're technology, software, technology company, AI.
Yeah, military.
What exactly do they do?
Well, they just
What
signed
military?
they just signed a deal with NATO.
Military.
Okay,
So
regardless.
how are they different than the rest of the technology group? How are they different? Why are they not categorized as technology?
I'm not gonna sit here and explain what Palantir does because it's quite
Okay.
it's really I wanted to get the from a technical standpoint. I like Palantir even from a technical standpoint.
Well, the chart looks, I agree with you, Paul. The chart looks one of the better charts I've seen in the last 4 weeks. As far as it's found some support at the 50 and it's up to the Bollinger Band. It's got some room to roll.
Yeah, again, looks different, Mark. I'm not saying, is that a 3-monther? Or
this is a 6, I think.
Yeah, okay, that's a 6.
But you can see here's where you're gonna find some sales up here at 107, just technically speaking. So I mean from a chart point of view, I like it.
Cool beans. Trying to find those few that we like.
It's just hard. It's hard for me to look at and say, okay, there's one guy who's sailing over to the Bahamas. He's not quite there yet.
Yeah, he's on the boat all by himself.
Bob and I were sitting on his deck here drinking margaritas.
Hopefully his sail doesn't fail.
See that, and that's it just wonders because the whole market. We talk about the tide going out lowers all boats, and there are tradable stocks out there, like Palantir, but what happens, they just signed a NATO contract, which made it pop, in my opinion, from what I understand. I don't follow Palantir, but again, that was by the news. The day before, it came back down to the 50, but the chart looks better than 99.9% of them that I'm seeing, Paul. So, but it's the other 99.9 that worry me.
I agree. I like Palantir, but I just feel in this market environment, I feel it's going to come back down to more reasonable numbers to buy it at. I think that it may be a little bit topsy right now at this number because of the market environment. Now, if we didn't have this environment, I would agree with you. It can run. But I don't think it's running anywhere in this market. I may be wrong, and I'm willing to accept that. But that's just my gut feeling about a lot of these, and the video is probably going to tear it down a little bit today. We'll see when it opens.
And it's risk management, you know,
Right.
I look at it, and I'm like, again, there's a huge storm and most all the boats are, you know, either in the storm or sitting on the sideline, and I don't want to be in the storm yet, you know, and I'm patient, you know, and I don't have to be in the market all the time. And in fact, most really good traders and investors are not, you know, traders especially are not always in the market. And like Trent said, he's got a friend, he trades 15 times a year and that's it, you know.
Right. You know, when the hurricane comes to Florida, I run north to New Jersey.
Yeah, exactly.
I think
So
that boat
all
can
right.
handle it.
So we're getting a little, I want to thank everyone,
Bob's
and
boat's
we
good.
had good conversation today. Patrick, I agree. You know, you're looking back at it, and I use trends too. You know, I follow trends, and this is what trends do. And so I don't, I think what you're looking at, if it works for you, and I see the same thing on my chart. You said gold is going to kind of plateau and maybe come down. My chart said the same thing. I think we're plateauing on gold right now. You know.
Just that it might be an opportunity for shorting.
Yeah, exactly. And my chart says the same thing as yours. So I would agree with that, you know. And the rest of us, you know, and everyone else, we're talking about, you know, what's happening. It's uncharted waters, like Trent said. How many times have we put tariffs on everybody? It's zero, you know, and liquidity is involved in that. And there are tradable equities out there. If your risk management plan says go for it,
Yeah.
that's fine. Bob and I'll be sitting on his boat, margaritas for a while. But there are some out there, you know, like Paul showed Palantir, you know, it's a nice technical chart.
Yeah, I just have in front of me here the Financial Times, and it says Wall Street banks reap $37 billion after traders cash in on Trump volatility.
Well,
Yeah,
and that's
exactly. You hit it on that.
Wait till the regional banks come out, though, Patrick, that don't have trading desks. Well, then we'll see.
Yeah. All right, we got to wrap it up here. We're about to open up here in 4 minutes. Thank you all again for participating. We will be here tomorrow and Friday, though we will not. We're going to take the day off. I will also send an update if Kerry's going to do his call on Friday as well. So look for that. Meantime, you all be safe and be careful and enjoy your margaritas.
In my palm, yeah.
Don't
See you
forget
on
the
the
salt.
boat, Bob.
See y'all later.
All the best.
Thank you all.
Bye.
Bye.
Bye.